So we were talking about the PMI, and what stood out to me in particular with Europe is that it was Germany and France that were really leading the way, and Germany had been a little murky. Give me your global snapshot, Chad.
Well, obviously, the Eurozone is bouncing back somewhat, hence the reason why you have this PMI number that's a little bit somewhat more elevated. I do believe, though, that this is going to be short-lived. And then when you look at the Eurozone and the debt dynamics within the Eurozone, we're calling for roughly about a 1% type of growth trajectory for 2015. I should say we are not as bulled up about the Eurozone project as everyone else. So we believe that the dollar will start to strengthen again once the U.S. economy goes through this transitionary period, this transitory period that they love to talk about. And we're going to see growth there roughly about 3% for 2016 here in the United States.
So isn't a weaker euro good?
Weaker euro has been rather
Isn't Germany
good
cheering that?
Yes, and that's the reason why you have a strong PMI number today. But we believe, though, that going forward, you actually have to have real economic activity and the credit dynamics there, we believe, are just going to be somewhat more listless.
Cliff, what about you? Do you think if if Europe can get this Greece issue solved, that it could actually see some nice growth for a while?
It should. It certainly has a rate backdrop as a tailwind behind it, with extremely low rates throughout Europe, so that should help it. And it has stabilized, and as you showed, the PMI number was very good, I think. I mean, it's 53, 54 is very good, considering what they've been through a year or two ago. So it looks good.
Well, talking about, sorry, Chad,
I just want to add another thing. When we talk about this trajectory of growth within the Eurozone, even in good times, we weren't looking at a 4 handle on GDP, nor were we looking at a 3 handle on GDP.
Right.
And that's the reason for that is you have an aging population, you have productivity that's not great there. And, you know, we are believers that the long-term equity market returns there are roughly going to be around 4.5% over the next 5 to 7 years.
Well, let's talk about what we saw in the markets over Europe, because at initial blush, it was pretty perplexing. Everyone comes back feeling a little bit better about what's going on in Greece, and the euro falls against the dollar. That was what we saw today. And you had European stocks staging a pretty big rally on the back of it. I saw many notes out as to try and explain why we saw this. What did you guys think?
Well, that's the normal reaction, but you have Greece, I think, as a much bigger part of the decision-making today.
But if it was good news, shouldn't the euro be up?
Probably, yeah. But Greece is really driving the news, and there hasn't been a decision on it today. I mean, it's still more the same. There hasn't been a final decision made as to what's going to happen with Greece. So I think that's really what's driving the news in the markets today and this week.
So Cliff is correct. Risk markets are keeping a careful eye on Greece. Obviously, that's what we talk about right now. But there's another undertone to this, and you're starting to see credit dynamics on the household. For example, home prices, home sales starting to gradually improve. That means that the debt deleveraging cycle is starting to subside. And that is a tremendous thematic and backdrop which could push the United States when it comes to growth stronger, get you to that 3 handle as opposed to a 2.3%.
So one of the reasons that people are selling the euro is they think that the U.S. is getting ready to raise rates, or probably will this year, but that the Eurozone is a long way. There's not going to be an ECB version of the taper. I take it with your prediction that growth will remain slow, you don't think there's any risk of sort of an early end to the easing?
No, well, look, the ECB has to deflate their currency. Right, the Eurozone, obviously, you're seeing it within the economic numbers. That's the way that they can gin up their inflation expectations and try to break that cycle, that Japan-like cycle. The credit dynamics there are, when it comes to the real true economy, are somewhat better, but not great. Here in the United States, we're starting to see spending, mortgage debt starting to improve again. You're starting to see business investment pick up again, look, I mean, you could definitely see a second-half recovery here in the United States, not a 3.5% or 3.75% kind of growth trajectory, but nonetheless far better than the 2.3% that we've seen.
So positive, this guy.
So
I don't want to be positive today.
Switching continents, there was a fascinating note out from Citi this morning looking at this question of financial market liberalization in China and what that would mean for the various sectors. And there's this great chart, which we've reproduced here, talking about, like, what happens. So what Citi's argument is that the stock market has already run a lot, but that we could be at the early innings of a massive expansion of the bond market. And they show this chart looking at what happened to various national bond markets after financial liberalization. You see Germany, Japan, and Korea massively exploded. And therefore, is this China's future? Would you expect, Cliff, to see a massive expansion of the Chinese bond market in the future? And what else would you expect to see in an era of financial market liberalization?
It's possible. It's really up to companies who want to issue and can issue at reasonable prices and have really good uses of proceeds for that money. I think that's really what it comes down to. There are limits on investors buying into China, and
presumably, that would be lifted, right? You have investors could get more access to bonds. You have a local debt swap market, and securitization would come, so there'd be more issuance.
Okay, so we're in the infancies of that, perhaps. But let's talk about China for a second. Their overall economy, roughly 10 trillion. What percentage of that is actual government spending? I believe it's over 50% if you believe the World Bank, and I think I'm being conservative. When you look at the equity markets there, yes, they've had a beautiful run. Their valuations are roughly 18 times, similar to ours here in the United States. Price to sales are 1.8, similar to ours in the United States. And you have a growth trajectory because of that great rebalancing that is decelerating rapidly, if you believe the numbers, which is what I'm somewhat skeptical of. It's all science fiction over there. So what do we believe? Yes. They will eventually liberalize their bond market, but then they have to liberalize currency flows, which they're not going to do in the not too distant, in a wide way. So I just think at this point you want to stay away from the Chinese market.
But there is a really good chance that we will see the renminbi part of the special drawing, right? So it will be quote unquote legitimized in a world market as a backed currency, in which case that would, in theory, spur more demand for RMB denominated assets. Bam, bond market.
That would be wonderful.
You don't like it. You're like, no, I don't like it. I'm done.
Cliff, what do you think?
I would have to be a lot more comfortable with all the way accounting and all the laws work in that area before we were really going to invest a lot of our clients' money in that region.
Well, the last thing I want to end on here is BlackBerry, because we saw it spike up about 9% pre-market. Then it fell, ending the day lower here. When was the last time you guys bought your BlackBerry? The first BlackBerry I had, I think, was like 9 years ago, and then I dumped it. Cliff?
I still believe in BlackBerries, and here's my unit right
here.
There
it is. There it is. He's carrying it with him.
I have my iPhone, too, my iPhone 4. But,
double manning there.
It still works. It still does the job.
What was the year you last bought your last BlackBerry, Chad?
Oh, gosh, that was back 2010, maybe 2007.
Oh, wow.
So there you go.
I never had one. I went straight from like a flip phone to a iPhone.
Good for you. Yeah. Good for you. And I think that therein lies part of the issue in terms of they're still selling that hardware, trying to diversify in software, but it's not enough to make it up.